Friday looked like a crash, but it's not. It's a reset. The market dumped the second Trump reignited the trade war with China. 100% tariffs, panic headlines, and everyone rushing for the exits. The Dow fell almost 900 points. The Nasdaq smoked for more than 3%. Fear everywhere. And here's what I see. This is exactly what a buying opportunity looks like when you're ready for it. While most investors were losing their minds, I was calm because I was already positioned for this pullback. My indicators warned me. The charts were stretched. I went conservative, and that decision just saved me a lot of pain. See, this is why you need a system, not for the good days, for days like this. No panic, no guessing, just execution. The question is, are you prepared for days like this? Friday wasn't random, it was a reaction. Trump reignited the trade war with China, and the market instantly priced in fear. He announced new tariffs, some as high as 100%, and hinted at export restrictions on technology. The result was chaos. The major index cratered, and billions in market value were wiped out in hours. Tech got hit the hardest. Nvidia, AMD, Qualcomm, TSMC, and most of the AI names bled 2 to 7%. Semiconductor stocks were the punching bag. The VIX spiked over 30%, one of the top 1% moves ever recorded. That means investors rushed to buy protection, not because the world was ending, but because no one likes being caught off guard. And Tom Lee called it a buying opportunity. His words, unless there is a real structural change, this pullback is a buying opportunity. He also reminded everyone that markets rarely bottom on Fridays and that the odds of being higher a week later are strong. He's right. We've seen this movie before. Trade war flares up, stocks pull back, headlines scream, then the market shrugs it off and moves on. This wasn't a crash. It was a market handing out discounts to investors who can look past the noise. You see, one bad day doesn't end a bull market. Year to date, the S&P 500 is up roughly 12%. The Nasdaq is up about 15%. That's not weakness, that's momentum. Pullbacks like this are normal. They're the cost of staying invested. We've had trade war scares before. Every time the market dipped, digested the news, and pushed higher once the dust cleared. Nothing about Friday changed the big picture. Corporate earnings are still growing. AI spending is still exploding. The Fed is slowly easing. The structure that built this bull run is still in place. Investors panic when they zoom in on a single day. Winners zoom out. If you're in quality names with strong balance sheets, growing revenues, and real products, this isn't pain. It's an opportunity disguised as fear. History rewards the investors who stay disciplined when everyone else loses focus. Preparation beats panic, and this is why you plan ahead. Friday's sell-off didn't surprise me. I was already positioned for it. My indicators told me the setups were stretched, so I shifted to lower risk puts, smaller premiums, higher probabilities, less stress. When the market dumped, I didn't panic. I ran the plan. My puts on several stocks stayed out of the money. A couple dipped a few dollars in the money, but even if I get assigned, my cost basis stays below the current price. That's what planning does. Technical analysis saved me this week. The charts warned me before Friday's crash hit. I covered this in my Patreon and on Tuesday's YouTube video, and when I said several stocks were overextended, you can see now how that call kept me safe. Technical analysis does not predict headlines. It measures risk. When stocks are stretched, any shock hits harder. The news was the trigger, but the warnings and the setup was there all week. Most investors react after the fact. The pros prepare before it happens. Having a system means you don't guess, you don't chase, you just execute. When fear hits, most people freeze. You need to follow the data, not your emotions. That's your edge. And on Tuesday, I said stocks look stretched. That wasn't a prediction, it was risk management. And you can spot it too. When prices run too far above the 20 or 50-day EMA lines, when volume fades while price climbs, when energy headline screams new highs, that's risk building, not strength. Investors ignore it because greed is louder than logic. Everyone thinks they can grab one more day of gains. That's when the market punishes the late entries and rewards the patient. The key is awareness. You don't need complex formulas or secret indicators. Just pay attention to the distance between price and trend and how momentum behaves when everyone gets comfortable. The best time to prepare isn't when fear hits, it's when everything still looks perfect. Every pullback like this should force one question. Did anything change in the business I own? For most stocks, the answer is no. Tariffs shake headlines, not fundamentals. At least not yet. Trump's new 100% tariff talk hit sentiment first and the numbers later. if at all. We've seen this pattern before. The threat sounds huge because Trump is using this as a negotiating tactic. Then the deadlines get pushed and deals get watered down. The markets panic and then they recover. The real damage comes when investors overreact. They sell quality names because they confuse political noise with structural change. That's emotion talking. Here's how I check myself. Number 1, are earnings still growing? Number 2, are customers still spending? And number 3, is innovation still driving the story forward? If those boxes stay checked, my conviction and my thesis holds. This isn't blind optimism, it's context. The same tariff drama hit in 2018 and 2019, and both times markets bounced once, reality replaced fear. So I'm not dumping positions over headlines. I'm watching how companies respond. If the margins hold, if guidance stays steady, the long-term thesis stays intact. Fear doesn't rewrite fundamentals. It just discounts them for a few days, and that's when disciplined investors quietly add to their positions. And this is where investors separate from spectators. When risk rises, play defense. Go with safer options, lower strikes, more time, smaller premiums. Protect first. Defense keeps you in the game long enough to win. Now let's talk offense. When fear peaks, I start hunting, but not recklessly. I look for stocks that bounce near the 20 or 50-day EMAs. Those levels often mark where smart money steps in. If the market opens red Monday, that's fine. I'll look to scale in if the stocks find a level of support and start going up. There's no chasing, no guessing. Watch the price action. And if you see what you want, consider buying. This is the time to shop your high conviction stocks, the companies you'd still hold if the market went sideways for a year. If you don't believe in them long term, don't buy. We have to understand that the trade war noise might keep swinging headlines for weeks or even months. That's fine. Fear creates discounts. Conviction cashes them in. I'll be watching my indicators for fresh buy signals, and if you already use them, you know what to look for. If you don't, there's a free trial link below so you can see how they work for yourself. The point isn't to predict what happens next, it's to stay ready when it does. So if you're still jumping in and out of stocks with no plan, ask yourself a simple question. How is that working out? One of our members wrote this: I just tripled my account today. Now I have cash for future market crashes. I have learned to be a better investor here. That is what discipline does. It compounds wins. It protects when fear hits. These are my numbers even after Friday's sell-off. I build positions with rules. I stick to them when the news gets loud. Now, you have two choices. Choice 1, keep reacting to headlines. Keep guessing. 6 months from now, you'll wish you moved. And choice 2, get a plan. Get clear, execute with conviction. Join us inside my Patreon. Inside it, you get real-time alerts with the whys, daily breakdowns of what is moving and what matters, the exact frameworks I use to stack gains with options on quality stocks, and a community that stays calm when the market gets loud. Right now, it's just $30. I know it's underpriced. It works. If you're ready, the link is below. Either way, don't say you were not told.